Hi everyone, I'm Ken from Crypto Trading KS and the inventor of the CTKS method and Borsog trading. If you're new, a very warm welcome and welcome back KS family. And please note, I don't have WhatsApp or Telegram. From my 30 plus years in financial markets, I explain the smart money mindset to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth and positive excellence in the process. Let's run the numbers. Bitcoin is currently up 0.19% to 17,161. Ethereum is up 0.5% to 1272. And there's great news for the masterclass students and also the public. Level 1 and Level 2 certification have been released inside the masterclass in LV26 and LV27. And at nearly $5,000 US, the masterclass can be out of reach to a lot of people. That's why there's a very special offer for Level 1 and Level 2 certification on the ctksmethod.org. When we apply the CTKS method, we're using a standards-based process to reveal smart money buy and sell levels from any price chart, and you're going to see that in action today. You literally learn it once and apply it for a lifetime to think and profit like smart money. Kate and I absolutely love the comments yesterday. Kate and I would like to thank each and every person who commented. Just fantastic. And Kate is currently passed out on the couch. I guess 4 hours of sleep over 2 months doesn't do anybody any good, and I'll be going to join her soon. We know that we control the trade or investment, but the market controls the return, and that's based on your active learning, your knowledge and your courage, and the market penalizes blame and gambling. To help us make the market move in our direction, we have a daily three-dimensional risk management code called the CTKS code. The first part of this code is to figure out where the market is going. What did the market do today? What is it doing right now? Is it going down? Is it neutral or going up? And you pop that in right at the front of the code. Where do you anticipate the market to go in the next 24 hours? We know that we control the trade or investment, but the market controls the return, and that's based on your active learning, your knowledge and your courage, and the market penalizes blame and gambling. To help us make the market move in our direction, we have a daily three-dimensional risk management code called the CTKS code. The first part of this code is to figure out where the market is going. What did the market do today? What is it doing right now? Is it going down? Is it neutral or going up? And you pop that in right at the front of the code. Where do you anticipate the market to go in the next 24 hours? Will it go down, neutral, or up? And you just take the first letter and you pop it up there of the highest weighted percentage. Then you think about your portfolio. If the market goes in the direction that you predict, what will happen to your actual portfolio? What percent do you believe will go down? Stay neutral, that is generally cash. And what do you think will go up? These are basically inverters. If the market is coming down, that's an inverter. This helps you to do portfolio management and how to think constructively about what you actually invest and trade in. The most important thing to do is your synchronization factor. The markets are always trying to desynchronize market participants. Money will always flow between the synchronized and desynchronized. The desynchronized fund the synchronized, but the synchronized are always getting desynchronized as well. Please let me know in the comments, what is your CTKS code for today? This is not about being right or wrong. It's about improving. Remember, the market is trying to desynchronize you. It literally exists to desynchronize. We can see in the main markets that Dow Jones Industrial Average came up, the S&P 500 came up, NASDAQ and Russell. What you also notice is the VIX came up. This is particularly concerning. Also some good news, FTX founder Sam Bankman-Fried arrested in the Bahamas. SBF committed fraud, and it's fantastic that he's been arrested. And that fraud has got nothing to do with the crypto industry. That fraud is on SBF. As CTKS analysts, what we actually do is that we look across all of the charts that influence the chart that we're trading currently. And one thing that we see In the last trading session, the VIX indeed spiked up. It jumped up, and we've been waiting for this for quite a while. Just because the market indices came up as well doesn't mean much, because this could be very short-lived upward price momentum, and we have to stack probabilities to see if that is actually the case. And we can see bond yields actually came up, bond prices came down, gold was hit, and the dollar just came up a little bit. And what we're actually noticing is that oil is decreasing, trying to find a bit of a bottom, but just under severe negative price momentum. We must always watch oil. And that is why it's so incredibly important and covered here. And masterclass students, you get this live chart in TM6. We can also see junk bonds. The risk-on attitude of the markets is increasing. Bitcoin is incredibly important to look at, because just like junk bonds, it actually shows risk on sentiment or risk off sentiment. We can see the risk on sentiment in Bitcoin is increasing. Bitcoin is the blue line behind every one of these 8 charts. Long-term, investors and traders understand that the main market news is all about just reflecting current price action. And this reflection causes a lot of story-based analysis. Investors grow more confident Fed will pull off a soft landing. And we can absolutely see there's some positive momentum in the structure of these particular charts. For example, we can see that the Dow Jones Industrial Average has overcome a level of resistance, one here, another one here. It's looking very good, but is it consistent? Will it hold up? And that's why we have the CTKS method. What about the S&P 500? On the SPY, when we look at the S&P 500 ETF, we can see that we've definitely overcome a level of resistance. But look at the barrage of resistance we're now heading into. We tried to get through it when Jerome Powell spoke, but we were pushed back, and we were pushed back making a lower low. This is not exactly positive price momentum. There are a lot of smart money sellers in this area pushing price down. Looking at the SPX itself, what will happen if price comes down? We can see there are major levels of support, but they're all different in terms of their power. If we look at this particular level of support between 37.66 and 38.27, it is quite probable that price could, if it decreases in price, if it comes down, it could be caught in this support area. There's a very big difference between having support below and having no support below. And we do not go off recent price action. And why is that? There's a really, really good reason. Let me explain it. And we cover this extensively in Level 1 certification. The problem with financial markets is they involve a focus on recent indicative price, which I call RIP, because it literally puts your funds under the ground. And because people focus only on the current price action, they ignore all of market structure, and then they have to come up with SBA. What's SBA? It's story-based analysis. The easiest way to explain it is from an ancient proverb about 6 blind men who examined an elephant, but one examined the tail, another the foot, another the belly, another the ears, the trunk, the tusks. Of course, the fairy-based analysis, the story-based analysis, was that the tail was very, very different than the trunk, and very different than the tusks. And this is how financial media looks at the market. We can see this is actually just an elephant. And when it comes to the financial markets, after the CTKS method standards are applied, you can see the real price action. You can see, for example, the real elephant in its natural surroundings for the first time. This proverb is all about how different people see different things depending on their focus. We focus on everything, so that's what we see. This is a really important thing to understand when it comes to looking at financial markets. For example, an article from today's Wall Street Journal. How long should Powell keep raising interest rates? Fed officials are divided. Cracks are beginning to emerge over how stubborn inflation has become and what to do about it. Back on November the 30th, we analysed Jerome Powell's speech from the Board of Governors of the Federal Reserve. Jerome makes it absolutely plain we have not seen clear progress on slowing inflation. The Fed's concern is the tight labour market. There are about 1.7 job openings for every person looking for work. And Jerome plainly said monetary policy affects the economy and inflation with uncertain lags, and the full effects of our rapid tightening are so far yet to be felt. Everybody keeps talking about a pivot, but Jerome has been very rock solid from the start. He's saying, no pivot. We have to curb inflation expectations getting baked in to consumer and producer decision-making processes. When we look at global inflation, parts of the world are just totally out of control inflation-wise. You can see Zimbabwe 255% inflation, Lebanon 158% inflation. Inflation is a terrible, terrible thing. It destroys purchasing power and therefore makes the country's citizens poorer. And you can see it's spreading across the entire globe like a virus. In a little under 2 days, the FOMC will meet and decide what the base rate, the federal funds rate, will be going forward. And there's currently a 72.3% probability that that will be 50 basis points. There is also a 27.7% probability that it will be 75 basis points. The probability of a 75 basis point increase is not 0%, it's nearly 28%. And that's with just a couple of days to go. Smart money looks at the markets in a completely different way than do retail investors and traders. They don't want to see a part of the elephant, they want to see all of the market. Because elephants, when provoked, can be very, very dangerous. We can see the elephant starting to get provoked by the jump in the VIX, also the decline in oil prices. It's absolutely vital that we keep our eye on the DXY, and the DXY has been marked up with the CTKS method here. The outcome of that are what are called SLs or Stanfield levels. These are very, very powerful levels of smart money buy action and smart money sell action. You can see here just how well these lines are obeyed, and they're never drawn from recent price action, as you will find when you do Level 1 certification, as well as Level 2 certification. And we can actually see that the smart money sell level at 105.357 has held very, very strongly so far. But with the VIX spiking, maybe we're going to see an upward momentum through this 105.357 mark. The DXY is currently 104.998. As a trader and investor, if you are to be professional, you must look at all of the charts that impact the chart that you're trading. And please do not just rely solely on the news. The news will examine the tail of the market today, the tusk of the elephant, the market tomorrow, the ears the next day, and you'll be left utterly confused as to what is going on because it just changes. It's a different part of the market. For example, you need to look at the VIX, you need to look at major indices, bond prices, gold, the DXY, yields, oil, and a variety of other indicators. You need to know the internal market structure through ODMS, or Objective Dynamic Market Structure. You need to gain an understanding or perspective how things are actually moving inside the market and within the sectors as well. This will absolutely impact the very thing that you love to own or trade in. If you would like to sign up for the CTKS method service, where we actually mark up the charts according to the standards and then just show you what all the key levels are, you can do so. And you can actually lock in a very, very special price of $39 per month. Just lock it in, just secure the discount by going to ctksmethod.org, just scrolling down in the page until you find this area. That will lock in your discount. And that's all you're doing. You're just locking in the discount, and it won't stay at that $39 per month for very long. It's usually $99 per month, but $99 is far too cheap. So that $99 will go up over time. But if you actually subscribe to this and lock in your $39 per month, it will never increase. When we examine Apple's price yesterday, we said there was a lot of smart money buy levels underneath Apple's price. You can see them here represented by Stanfield levels, or SLs. Apple is currently 144.50. It has very good structural support below it at 139.83, 137.32, 135.10, and a barrage around the 131 to 132 levels. The reason that we look at market structure is we need to know where things can fall to, where they gravitate to, and where they can fall to. When we look at Tesla, currently trading at 167.70, post is 168.05, we can see that there are multiple smart money sell levels above at 174.60, 178.07, 179.18, but we can see the next smart money buy level is down at 130.30. This is a little bit concerning. If the market does not turn around, we could see a big drop in Tesla's price. And Tesla's been battling a lot of very, very strong selling resistance at these levels above. This is why we must pay attention to other charts. For example, if you're just in Tesla and you're not looking at Apple, you're making a mistake. Apple, with its support and very weighted dominance across major indices, if that bounces, Tesla will bounce. If Apple starts to fall, Tesla will fall more. They are the probabilities. And the CTKS method is the only method available to give you this dynamic structure of the market. And it updates candlesticks and candlestick pattern analysis 270 years worth. It's an incredibly powerful system. Many crypto investors and traders don't look at the main markets, and that is a big mistake. The main markets are the weight that is tied around the financial system's neck. If the main markets go up, that means risk on activity and funds flowing into crypto. Unfortunately, very few people understand that crypto is just the next evolution of the internet. They think that it's some speculative foray, but it's not. It's the ownership layer of Web 3.0, owning the protocols of the internet. If you wanted to own the internet as it stands now, Web 2.0, you would just go buy a proxy company, for example, Amazon. But with Web 3.0, you own the direct protocols and you own them. When we look at total crypto market cap, we can see it's been bounding between a smart money buy level and a smart money sell level. We were talking about this yesterday. As the crypto market sold off, it should hit this smart money buy level at 799, and it did. But if it went a lot further than that, we would be in trouble, because the next smart money buy level crypto wide is 707 billion. It's critical that we don't lose this structural integrity as to where we are right now. And you can see just how these SLs are so incredibly powerful. Let me just zoom in here. You can literally see crypto wide, the sellers are coming in en masse throughout the tens of thousands of cryptos and selling at this level. This is how powerful marking up your charts with the CTKS method actually is. It's a skill that you learn once and gain for a lifetime. Professional investing and trading is not about guessing, it's about knowing. 95% of people guess and then they get financially hammered. We don't guess. We actually run the numbers and we look at dynamic market structure from an objective basis, because we need to know how things are moving. And you can see this $808 billion level in total crypto market cap has held to a T. And you'll see this time and time again. These SLs are incredibly powerful. The total crypto market cap is currently 805.9 billion. And why do we look at this? This is the thing. With a professional view on the market, we look at everything. The more we look at, the better. And of course, you don't have the time to individually mark up every single chart. That's why the CTKS method service is there. It's there to help you out. The concept is, when we look at this particular dynamic playing out through total crypto market cap, what you actually see is the entire crypto market cap actually came down in this basis. That means that your beloved alts have been obeying total crypto market cap, but you may never have known that. Or you may have thought it and now connecting the dots. And that's what it's all about. The more charts that you look at from a structural perspective, not recent price action only gives you stories. Don't be like these particular guys, just analyzing the market, whatever part of the market, just one aspect. You don't want to do that. You need to analyze it all. That is, if you want to be professional. And what do professionals do? They keep their money and they make more. CoinShares recently put out their flows by exchange country in the millions, and there's been a total of 8.8 million of weekly flows, the majority of which have come through Canada. Total crypto market cap is very influenced by Bitcoin's directional movement and market structure. And you can see here we've applied the CTKS method to Bitcoin and marked up the Stanfield levels as well. We can see that Bitcoin is currently trading at 17,164. We have a smart money sell level at 17,426 and a smart money structural buy level at 16,653. These are not recent indicative price levels. These are all of price levels. And we can also see that max pain for the coming day is at 16,750. And for the foreseeable future, after that, it's at about 17,000. The key to understanding how to read CTKS charts and how to actually interpret them from a buy and sell perspective, when you're looking at a smart money buy level, that's a smart money buy level. That's where people are buying. And when you look at a smart money sell level, that's where people are selling. If the sell level, if price doesn't reach up to the sell level, it means that there are a lot of sellers weighing price down. This is really, really important to understand. When you have this, it's called negative air. And it's something we talk a lot about in the CTKS Masterclass. As professionals, when we understand that a previous support has been broken, for example, if price came down and broke through this 16,653 mark, where is the next level of support? It's all the way down at 14,444. So we must be aware of this, and we are, because we understand market structure, and we do not care about recent indicative price, and we do not do story-based analysis. The facts are simply the facts. If we don't like them, of course, we don't like them, but we must know them. And looking at CoinShares flow by asset class, we can see the weekly flows on Bitcoin were very, very healthy, 17.1 million. And you notice that short Bitcoin actually came down 3.9 million. Ethereum is still getting outflows, as is Binance. Just keep this in mind. Polygon is coming down, but not by much. And Solana actually attracted more investment, even with all the fallout from FTX. When we turn to the longs and the shorts, we can see that the shorts were absolutely whacked just recently, but the longs are starting to get hit, and we can see the shorts are coming relatively out of the market, and the longs are buying the dip. But we absolutely have to understand the quantification of these liquidations, and we do that by going through them. We can see 24-hour liquidations were 46.61 million, and this is really quite low. Over 23,973 positions, that's really quite low as well. There's no major commitment inside the market just currently. And over the past 24 hours, 65% of total liquidations were long. What about the past 12 hours? 88.32% short. Past 4 hours, 96% short. Past hour, 85% short. It's really good to keep your eye on the liquidations. It really helps to contextualize where price is moving and the power behind those movements. Over the past couple of days, we can see that as price came down, the longs were getting liquidated, and then that whooped around to the shorts getting liquidated. 240,000 versus 1.37 million. It's just a really tiny number at the moment. Over the past 24 hours, the greatest gainers BSV, Stacks, GMX, Dash, LDO, Comp, and Quant. And the greatest losers over the past 24 hours, TWT, Chain, Axie Infinity, Flow, BNB, APT, and Tezos. We know that your beloved alts cannot escape Bitcoin's gravity. When we look at Ethereum, Bitcoin's gravity is in the blue line. It's the blue line on all of these charts. Ethereum is moving pretty much in lockstep with Bitcoin's directional bias. And this directional correlation is really important to understand. If Bitcoin goes up, unless you have an inverter, you have a 99% probability of your beloved alt going up. But it also works in reverse. If Bitcoin comes down, there's a 99% probability that your beloved alts will come down as well. So just keep that in mind. And we can see BNB is showing a little bit of weakness at the moment. Why could that be? With the FTX fraud and SBF being arrested in the Bahamas, a lot of scrutiny is on centralized exchanges in crypto. To answer this question, we have to go back a little bit in time. This is a Reuters special report, how crypto giant Binance became a hub for hackers, fraudsters, and drug traffickers. And the tagline reads, for 5 years, the world's largest cryptocurrency exchange, Binance, served as a conduit for the laundering of at least $2.35 billion in illicit funds, a Reuters investigation has found. With their opening statement, they talk about the Lazarus Group, a North Korean hacking group that actually does cybersecurity heists or cyber heists. They took 5.4 million out of a Slovakian crypto exchange. The next paragraph is really interesting. Several hours later, the hackers open at least 24 anonymous accounts on Binance, the world's largest cryptocurrency exchange, enabling them to convert the stolen funds and obscure the money trail. In as little as 9 minutes, using only encrypted email addresses as identification, the Lazarus hackers created Binance accounts and traded stolen crypto from Etabase, the Slovakian exchange, according to the account records that Binance shared with the police. Maybe just to give you a little bit of history, in 1993 I set up an internet service provider, and the government was going to pass legislation to make me accountable for every email that was sent through my service. This would be like saying to Google, if you have illicit activity on your Gmail accounts, for example, we're going to fine you. You obviously will know because you can read tens and tens, hundreds of millions of emails per hour. It's just crazy stuff. And the whole crypto industry was born of confidentiality. It was one of the main foundation tenets of the movement. As crypto grew larger, its footprint made it very, very visible to regulators. And of course, the centralized exchanges had to abide with the AML, the anti-money laundering provisions. And that's what they've done so in the main. One thing that I used to do with my students in first and second year statistics, I would give them something like this paragraph to analyze statistically. Separately, crypto researcher Chainalysis, hired by US government agencies to track illegal flows, concluded in a 2020 report that Binance received criminal funds totaling $770 million in 2019 alone, more than any other crypto exchange. This is a really important statement, more than any other crypto exchange. Binance is the world's largest crypto exchange. It's a behemoth. It's so big that it literally dwarfs other players. This is current data from right now. Look at the volume from Binance, $10.82 billion in the past 24 hours. They're talking about 770 million across an entire year. And look at the next major exchange, Coinbase Pro. Whoa, 1.12 million. That's 89.65% less volume And then look, OKX, 671.4 million. This just goes to show you, when people do statistics, just be really, really aware of what they're talking about. And a lot of people aren't. Also note, this particular Reuters investigation, and they do really good investigation, I love reading their reports, was filed on June the 6th, 2022. This has not just come out. CZ and Binance have been in the press for all the wrong reasons for quite a while, and it's all about the existing financial system trying to bring this rogue element, this crypto stuff, in under the fold, under the banking's loving embrace, or I should say banking sector. When people understand the crypto was born anonymously by Satoshi Nakamoto, and then they understand that the whole concept and core was to step outside the financial markets, of course these things are going to happen. The crypto market does have to adhere to government policy, and that's something that crypto doesn't want to do, but it must, to create widespread adoption. It's always important to have background when you read a particular article. US Justice Department is split over charging Binance as crypto world falter, sources say. As you can see, this investigation began 4 years ago in 2018. This is not an investigation that just boiled up yesterday. It's already 4 years old. And it's all about Binance's compliance with US anti-money laundering laws and sanctions. Binance is in a very strong financial position, and it's basically been acquiring parts of the crypto industry. And why is Binance so successful? It's pretty simple. They have the lowest trading fees. If Coinbase and any other particular exchange want to outcompete Binance, lower your trading fees. It's really important to contextualize things from a statistical basis. Binance reported volume over the past 24 hours, 10.76 billion, but this is only in the spot market. That's spot, S-P-O-T. Spot is where people use their actual money to put in and buy something. They hold it as an asset because they own it. What about derivatives? This is all about borrowing. It's about actually leveraging up. Look at the adjusted volume here from Binance Futures, 23.09 billion. That's right now. If we add these two numbers together, that's 33.85 billion in 24 hours. How does this compete or compare with decentralized exchanges such as Uniswap? 491.8 million. Whoa, that's really tiny, isn't it? Because of what FTX, Sam Bankman-Fried, did to the crypto industry, we can see that centralized exchanges are seeking to audit their reserves. And you can see Binance reserves at 57.68 billion. And look at OKX, the next largest one, 6 billion. This is what I was saying. Binance dwarfs everything. When you see an outlying divergence between Bitcoin's gravity and a particular alt, you can do what I just did. Research it, investigate it. Sometimes you'll find things, other times you won't, but the key is, at least you're doing the active learning, and that's what the market rewards. We can see with XRP, XRP is following Bitcoin's gravity and it's doing it strongly. There's an expectation that XRP will fail the Howey test and Ripple won't get hit with a lot of fines. So that's therefore driving this upward price momentum. But of course, the crypto industry is full of very, very positive people. But the concept, we must actually take note, if this actually goes against Ripple, if it goes against XRP, we need to factor that in as well. And the beautiful thing, smart money always profits first. It will be coming out of the price chart. That's why we look at it. Fundamental analysis will give you a pretty good understanding of where things are going from only one perspective, backdated data. But when you look at a price chart, like just what we've seen with Binance, you can see how investor sentiment is changing, and that's critically important. We can also see that Doge is lagging on Bitcoin's gravity. What do I mean by that? If you look at Bitcoin's gravity up here, there was this big uptick and then flattening, and the price is around here for Bitcoin. I'm looking at the blue line. Look at Doge. If Doge was following Bitcoin's gravity as it should, it would be up around here. It's down here. So just bear that in mind. This is another thing that we look at. Let's have a look at ADA. ADA is following Bitcoin's gravity but weaker. XRP is so far the standout, as is Ethereum. And when we look at Matic, Matic can really quickly recover, but it can also really sell off. So just be aware of Matic. But that can be very advantageous to us. We can see DOT kind of following in Bitcoin's gravity. It over accentuated this down part, and then it didn't come up. It just went flat. So that is actually showing some structural weakness inside DOT. And this is one of the things you're going to learn when you apply the CTKS method to your beloved alts. You're going to see things that you can't unsee. It's literally like magic. We can also see that Litecoin is fundamentally just following Bitcoin's gravitational ups and downs. When we look at SHIB, we can see that big sell-off and then kind of a recovery, but not to the same level as we've seen with Bitcoin's gravity. Just be aware of this. Tron, just moving in alignment with Bitcoin's gravity, it does tend to front run and sometimes lag. Tron is really interesting to look at. Solana not showing the strength it used to show in the past. Solana basically used to just rock and roll, but we don't know how much of that was to do with Alameda Research and FTX. We just simply don't know. And we can also see Uni just following in gravitational alignment, as is AVAX, as is Link, Atom, and also Stellar XLM. But we can see they're a little bit weaker. The Masterclass celebrated its 1-year anniversary yesterday, and it's come a long way in 1 year. When it was first released, I gave a very special discount, and many people missed out on this discount. I want to let you know that the discount on the CTKS method service is just like the discount I gave on the Masterclass. Please make sure that if you want to have an easier life, if you want the charts marked up for you, you still have to do the work. You still have to cross-compare and understand the linkages, but it will give you so much insight, and that is what it's there for. As well, some people just cannot simply mark up the charts all day long. They have other things to do. And the goal of this service is to one day mark up all of the markets. It's going to be awesome. And if you want to lock in that special price of $39 per month, this is the only way to do it. But please do so now, because it will disappear. And so long as you keep your membership active on that service, you will only pay $39, and you won't pay what it's really worth, which is way more than that. Even $99 is a gift. But the concept is no payments of any kind are due until the service is active and you sign up. If you don't want to sign up, don't worry about it. You just let the discount lapse. But if you're interested, please lock that in. Don't miss out. As a community, we focus on positive excellence. Having inner and outer peace is really underrated until you get it. So many people live in perpetual conflict, and this creates massive amounts of stress. And that stress is really bad for a person's health. With positive excellence, we focus on actually creating inner peace and outer peace. Even if you're in a stressful environment, you can always find a way to refocus and to recenter. And the markets are that stressful environment for sure. I thought it would be excellent to talk a little bit about inner peace in the comments today. Positive excellence is part of the CTKS method, because we need positive excellence to evict fear from our lives, and especially our trading and investing decisions. Any decision based on fear will actually create the fear. That's why we need to replace fear with courage. We need positive excellence when it comes to professional trading and investing to get out of the panic zone and the conflict zone, zone 1 and zone 2. The only way out of there is through learning and self-responsibility. which is really difficult because when you lose money inside the market, of course you get angry. But the key is to understand that most of the decisions that we make in Zone 1 and Zone 2, and everybody goes through Zone 1 and Zone 2, nobody escapes it. The key is getting out of Zone 1 and Zone 2 into Zone 3, where you make money, and Zone 4, where you keep it. Part of the CTKS method is the CTKS Creed, which primes our mind for profitability and happiness in life. These are a series of positive affirmation statements you just say to yourself. They're important because they get rid of fear and install courage. Acting on fear creates the fear. We don't want to do that. We need to act with courage, but also knowledge. Here is the creed. I know the universe wants me to succeed. Every day I show kindness, integrity, and gratitude. I know opportunities in life reset daily. I am worthy. I go slow to go fast. I start small and scale with Borsog. Life pullbacks give me the strength for the next life rally. I am dedicated and committed. I win or learn and never blame. And I never let a problem beat me because I solve it with positive excellence. If you have family or friends who could benefit from positive excellence and what we do here each and every day, please introduce them to our community by sharing a video. We'd love to see them here. We have one of the best communities on YouTube. Stay safe out there, my friends. Take care and see you tomorrow. Bye for now.